This video is brought to you by Seeking Alpha. Instead of $239, the annual plan will just be $99 through the exclusive discount linked down below. That's more than 50% off.
The following statements are an opinion. Don't sue me, bro.
Holy smokes, folks. AMC is undertaking the most brilliant move I've ever seen in stock market history, and it's literally designed to screw people who just don't read the fine print. And fortunately, because you're watching this video, even if you don't invest in AMC or care about AMC, you should pay attention to this, because not only will you learn how to not get screwed, but you'll see why fine print is just so critical, because it plays out, or should I say, will play out, likely, don't sue me bro, like a horror movie. But honestly, this could be really good for AMC stock, and really bad for people caught on the wrong side of this, dare I say, farce. Except the ending hasn't happened yet, but I kind of think it will, and I want to say I guarantee it will, but I don't want to get sued. But I think if you come back to this video in 6 to 12 months, you're going to go, holy crap, that was brilliant. Buckle up. Now look, before we get into the horror movie, we got to hit some good news for AMC, which is actually pretty terrible news. Cineworld, this is background, okay? Cineworld on Monday said they're considering filing Chapter 11 bankruptcy. Now, why does this matter? Like, why would it matter if Cineworld is filing for a Chapter 11 bankruptcy when Cineworld is obviously not AMC? Like, what difference is there? Well, here you go. There maybe aren't actually as many differences, and maybe that's why AMC is down like 38% today, because, oh crap, Cineworld is pretty darn similar. Take a look at this. Cineworld has 750 theaters, AMC has 946. Screens, Cineworld has 9,189. AMC has 10,562. That's pretty close, okay? AMC has 31,000 employees. Cineworld has 28,000 employees. Cineworld has 4.83 billion in debt. AMC has 5.3 billion in debt. So AMC slightly larger on all of those numbers, and Cineworld's going bankrupt. And so this has a lot of people going, oh my gosh, when you line up the metrics like that, no wonder AMC is down like 38% today, because wait, one of their competitors that's pretty well similarly sized, a comp, is going bankrupt. Now, that's a problem. Now, of course, some folks are going to say, no, Kevin, it's because the APE thing got issued. Oh, we're going to talk about APE. Don't we worry. And that is not why AMC is down 39%. AMC is down 39% in stock potentially because attendance is actually down 39%. In fact, if you go into their investor documents, which I've already done for you, you can see that ending in June, or on June 30th, attendance was 59,129, which is down 39% from when you compare their attendance to the 2019 document, when they had 96,955 guests in the same quarter. That shows you the substantial 39% decline in attendance for AMC movie theaters. At the same time, according to the BBC, box office revenue is down 32% from 2019, and according to my cousin who operates 5 movie theaters in Germany, business is up from COVID, but quote, nothing like it used to be. Now, Minions, Top Gun, and Jurassic World are great movies, but they're just not enough. And even Adam Aron, the CEO of AMC, has told us, yeah, we're gonna be pretty dry in the third quarter. While we're optimistic, there just aren't that many hits coming up. And at the same time, the entire market is being rejiggered. Netflix boomed and is now stalling, Disney is growing like crazy, and movie theaters are just barely crawling back from COVID lows and still lower than in 2019, as we saw with attendance down 39% compared to 2019. But it's unfortunately not just attendance that's down of these levels, and I've done this math for us already. Take a look at this. Admissions revenue, despite inflation, down 27%. Food and beverage revenue down 19.5%. Fortunately, advertising and gift card revenue is roughly the same as it was in 2019, so that's good, but food and beverage and admissions is where most of the money comes in. Now, the good news is people are spending more, but it's still not helping AMC become profitable. In fact, people are spending an average of $7.52 versus $5.58 in 2019. That's every person that goes to the theater spending an average $7.52 on food and beverage, like popcorn and concessions. That's good news, but it's mixed into a lot of bad news, especially when AMC is spending a ton of money on debt and losing money hand over fist. Why? Well, first of all, you can see their free cash flow is negative $117 million. Their net loss for the 3 months ended in June was $121 million. And folks, over 65% of the reason they're losing money like crazy is right here. Debt, folks. They have a mountain of debt. $5.3 billion of debt is very expensive. It costs them $79.5 million in interest just to service their debt. This is why Cineworld is like, dude, just stop the bleeding, stop the pain, let us go bankrupt and get rid of the debt. And this is exactly what people are worried about AMC is going to have to do to get rid of their debt. Their debt is a big problem. And the fear that AMC might have to go bankrupt is dropping AMC stock to the tune of 39% today. So, what is APE? And is APE the reason AMC is down 39% today? No. You're about to see why. APE is a Hail Mary. APE is what you throw on 4th down and at the 40-yard line. If you don't get a touchdown here, you's going bankrupt. And this Hail Mary attempt is literally the most brilliant play I have seen in my career of studying market psychology, stocks, and real estate. And I'm about to tell you why it's, in my opinion, a huge farce. Which reminds me, my research and my alerts on whether or not I'm buying or selling something or I'm dumping APE or what I'm doing are all part of the wonderful programs on Building Your Wealth link down below. Check out the link down below and use the coupon code expiring August 26th for the best price on any of my programs on Building Your Wealth, which include private live streams and Q&A with me, trade alerts and actual trade idea alerts. Pay specific attention to bundle number 1, which includes the 0 to Millionaire Real Estate Investing course, bundled together with the Stocks and Psychology of Money course. So, the Hail Mary. APE is a dividend Hail Mary. Now, a dividend is anything that you receive of value from a company. This could be in the form of cash, or it could be in the form of a shiny spoon of shares in some random other company. In this case, AMC is giving you a shiny spoon called APE, A-P-E, which actually stands for AMC Preferred Equity. And for every 1 share of AMC that exists, you will get 1 share of APE. Let's take a look at what that looks like. So on screen here, you can see that on the left, we have AMC shares. There are 516.8 million shares of AMC. And as a result, you can see that there are 516 million shares of APE. 1 dividend share was given for every share of AMC that exists. The big difference, though, is that AMC is actually backed by a company that hopefully in the future gets rid of their debt and makes money. APE is literally backed by nothing. And all AMC had to do to create APE is pay some legal and filing fees. AMC did not provide any cash to APE. There's literally nothing backing APE. In fact, they literally say in their disclosure, this is not a cash dividend. It did not cost AMC anything. So AMC, well, other than legal and filing fees. So AMC creates this shiny spoon called APE, which is basically worthless. There's nothing backing APE at all. And then they happen to conveniently call it AMC Preferred Equity, which is convenient because the entire momentum movement around GameStop and AMC has surrounded this idea that you want to be a diamond-handing APE. Hey, I still own the AMC shares I promised to hodl. That makes me a diamond hand APE, at least when it comes to AMC. Okay? Now, what about APE, though? And what about APE is potentially a big scam? And again, this is my opinion. I don't want to get sued by AMC because the reality is the better APE does, the better it is for my AMC shares. And you're going to see why. You just want to be careful about APE because there's something in the fine print that's kind of scary. So APE can be used as a tool to prevent AMC from going bankrupt. Let me explain that, and then I'm going to show the danger. So we know that Cineworld is going bankrupt because they have too much debt. We know AMC is a similar size, and AMC could go bankrupt too because they have too much freaking debt. And 65% of their loss is because of interest expense. So why not try to sell air or a worthless shiny spoon to people, raise cash, and pay down your debt in a legal way? How about you legally rip people off and pay down your debt so you don't have to go bankrupt and burn your bondholders or your shareholders, which would be ripping off the debt holders, right? So what's AMC doing? AMC creates APE. And what AMC wants is APE to go to the moon. Because if APE goes to the moon, $10, $15, whatever, AMC can start dumping millions of shares. And the cash that AMC raises when they dump millions of APE shares will go to pay down AMC debt, which is absolutely brilliant. And folks, this isn't like a big secret. They literally tell you this. This is in their last filing. And you can see here, AMC says that AMC Preferred Equity units, or APE, will provide AMC with a currency that can be used in the future to strengthen our balance sheet, including debt repayments, and provide capital for shareholder value enhancing and transformative investing opportunity. In other words, APE is literally a nothing currency they created just to try to raise money to pay down their debt. Very, 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 very smart. Okay, but how are they tricking people? Like, where's the sinister aspect here? Because so far, this doesn't seem bad. But what you want to remember is, the more APE goes up, the less debt AMC has. So if you're an AMC shareholder, you want APE to go to the moon. But you don't want to own APE. You probably don't. No, don't get me wrong. APE could go to the moon on momentum, but it's worthless. There's nothing backing it. Literally nothing. Now, you might be saying, wait a minute, Kevin, wait a minute. APE shares are worth something. In fact, Kevin, I'll have you know that APE shares are convertible to one AMC share. And APE shares have the same voting rights as AMC shares. I mean, that after all is what this form says, Kevin. Did you not read this form right here that tells you you have the same right to one vote per share, and that it could be converted to an AMC share, which basically in that case means that if I could buy an APE share for $7.31, I'm basically able to get a cheaper version of AMC, which AMC is trading for $11.14, right? So why not buy the APE if I could just turn that into AMC in the future? Because you're getting screwed and you didn't actually read the fine print. This is where we need that TikTok music. Dun, dun, dun. But I'm too lazy to edit it in. So, this is the thesis. And let me show you where it falls apart, where it all falls apart. APE is backed by nothing. And people believe that because they have one vote that equals AMC votes, and they're an equal amount of shares, obviously the APE shareholders are going to vote to convert to AMC because they would be going from something that's literally worthless to having ownership in an actual company. That makes sense. I would, if I was an APE shareholder, I would absolutely vote to convert to AMC. Oh, but this is where the fine print is just so glorious. So glorious. Are APE units convertible into common stock? If so, when? Like, listen to this qualification. Well, technically, yes. They literally write, technically, yes. Okay? But wait for the killer here. Wait for the killer. But only if the AMC board proposes and then investors vote to increase the number of authorized shares of common stock. Now, if that didn't make sense to you, let me make it very, very simple. AMC shareholders in the past have already refused shareholder dilution to allow AMC to sell shares on the open market because it would dilute shareholders, it would raise cash for AMC, but shareholders said, we don't want you to do that. So AMC shareholders already voted no to this once before. APE shareholders obviously are gonna vote yes on this. But wait a minute, folks, it ain't even gonna go to a freaking vote. Why isn't it even gonna go to a freaking vote? Because it literally says, only if the AMC board proposes it. And the AMC board has a responsibility to AMC shareholders, not to APE shareholders. The AMC board has the duty, the fiduciary duty to make sure that AMC shareholders are protected. So the board is literally going to refuse to even bring this up for a vote. That's the trick. So, think about it. Why would the board of AMC dilute valuable AMC shares for these worthless APE shareholders and shares? It makes no sense. They won't, because AMC knows what they're doing. They're selling you air. They're selling you thin air. They're selling you a shiny spoon called APE, and it's worthless. The AMC board would be moronic and would get sued to oblivion. They would be so stupid to let APE shareholders convert their shares to AMC shares because it would immediately dilute AMC shareholders by 50%. AMC would plummet. In the meantime, AMC is selling APE holders hopium that maybe AMC shareholders could let APE shareholders in the future through conversion. But again, only if the board proposes a vote for this, which they won't do. It's so obvious. In the meantime, AMC shareholders and the board are hoping for a rally on APE stock. The more APE rallies, the more AMC can dump this thin air and sell it to people. Remember, as of the initial filing, AMC raised $0 from APE. But if APE stabilizes and then all of a sudden AMC says, hey, we're selling a few $1 million of APE, well, now AMC slowly starts to get rid of their debt. It's a brilliant move. Here's how that could look. Look on screen now. If AMC sells APE or thin air, which they can sell up to 484 million shares of it in 2022 or 2023, but if they change their mind, they could sell all the way up to 4.484 billion shares. Whatever proceeds come from that, help AMC prevent bankruptcy. So for example, if they sell 484 million shares at $10 of APE, AMC almost wipes out their debt. They raise $4.84 billion by giving people nothing, just hope. It's brilliant. If APE goes from $7 all the way down to $1, and AMC is just like, let's just sell all 4.484 billion that we can still sell, then they will also raise $4.84 billion. And so it's my belief that AMC is going to dump APE token over and over and over and over and over again until it's basically worth zero. And when it's worth zero, they won't propose a vote to let APE shareholders come over to AMC. They'll take all the cash, pay off their debt, prevent bankruptcy, and this will go down as the greatest farce in stock market history ever. Oh, but folks, you could get an NFT of your APE token because it's just as freaking worthless. That's literally what their documents say. You could read it yourself, but I just gave you the summary of it, and I just showed you a little screenshot of that document. So let's make this very, very clear. APE is a ploy. It is a ploy to hope that meme stock traders pump up APE stock to the moon. So that way there's a sustained market. AMC can dump shares, raise lots of money, and pay off their debt. And again, if you want a free NFT to showcase how stupid it is to hold your APE shares, make sure to go to the AMC Investor Connect website and get your free NFT. Because let me tell you, APE shares are going to be worth as much as that NFT is going to be worth. Zero. In 6 to 12 months, I expect ticker symbol APE will be worth $1 or less. That would be an 86% decline from today. And it'll be worthless and delisted soon after that. The hope is that AMC will have paid off all of their debt before APE becomes worthless. But until APE becomes worthless, AMC will continue to use it as a free money printer. And this is a brilliant farce.